Hey guys, I'm just going to be going over the structure that we're going to be targeting for our weekly reports. I'm just going to start off by using an example of a trade that we've actually taken in the past, and hopefully this will answer some of your guys' questions about how to mark up the structure and also the targets that we're looking for. I'm going to be looking at USD JPY, and let me move down to the daily time frame and I'll just show you. We all took this TPM turning point candle. Well, most of us in the Discord, we caught this trade, all right? And, looking at structure, you can see that we made a higher high, put in a higher low, and we're targeting this higher high. So that is the step staircase or the zigzag of the structure. You can see it there getting put in. And what I want to show you is on the weekly, I'm just going to zoom in, okay? Basically, if you're having consecutive trending candles, and that is what we are trying to achieve when we give you guys our bias, we want the weekly candles to be consecutive trending candles. If that is the case, you're going to be putting in a new high, but you're not going to be breaking the low, the previous low. So you're putting in a new high, you're putting in a new high again, but the prior low is not getting broken. All right, so I'm just going to mark up this candle open because that was the move that we caught. And this is also just for Andy. I'm going to answer your question about AUDCHF, and I'm going to show you the same thing, okay? So that is our range. If we're looking at the weekly candle, basically you are saying that that's your higher high, and this is your higher low, all right? The new week opens, okay? So broadly speaking, on the higher time frame is just the wicks. Now what you want to do is you obviously want to enter, because we're longing, you want to enter at or below the open of the weekly level. So you basically want to be catching the bottom wick of a weekly candle. And how do you know that the bottom wick of a weekly candle is in? This is why Aaron and I are going to be giving you guys pullback zones, but you can already see it. You're between these two ranges. And I know I look for the body close, so ignore that for now. We're just looking at the actual range of the weekly candle, okay? You're getting the daily TPM turning point candle in between these two ranges is perfection. Even if you had a wick down here and still body closed inside of there, you're still looking for a long position, all right? The daily TPM turning point candle tells you that the higher low is in, that the bottom wick of the weekly candle is in. And that is literally the move that we took. Most of us got that move. Okay, and then candle body closing above the prior structure, I always say is the safest take profit. Obviously, I went a lot more, all right? But you can nest this down as well, right? You can go down to the 4-hour time frame if you like. And again, you're between the range of the previous weekly candle. So you haven't touched the high, you haven't touched the low of that candle. When you start getting your TPM turning point candles, you can start looking to enter. If you want to be more aggressive on your entry, of course, with the 4-hour, there is the risk of being stopped out. If the daily hasn't turned yet, you don't know how deep that pullback is going to be. But ultimately, I mean, you can see that this was a turning point candle on the 4-hour, but you might have been stopped maybe once or twice. That's very aggressive the lower down you go. So that is the range. I mean, the better... How I says, it's better if you are between the two ranges and you're getting a pullback, but it's not touching either range, and then you get the turning point candle, whether it's a higher low or a lower high if you're shorting. So I'm going to show you the short version of this now. I'm just showing this to you to help with any confusion about market structure, because looking on the daily, you can see the zigzag or the staircase of multiple candles putting in structure, but if you're looking at the weekly, right, it's just the top wick and the bottom wick, all right? Obviously then on the daily, it's not taking the bodies into consideration if we do that, but we know that we're targeting a candle body closing above that level, all right? So I'm just going to clean that up. All right, I'm going to do the short that Ichano caught, all right, on AUDCHF. Let's mark that up. Now, first I just want to say we're looking for consecutive trending candles. So usually is the second and the third candle after you've had one confirming candle is going to be your bread and butter. Those are the best plays. doing what I've just shown you. Sometimes you get lucky and you get a fourth and a fifth candle. This one went crazy. But getting the first candle can be difficult sometimes, okay? But I'm just going to mark up the range of the prior weekly candle and just show you, all right, that's a bit, okay, let's go down to the daily. Sorry, I just need to mark up that is the open of the week. And now we're getting to the daily, okay? So look at it. You're between the two ranges. You're between the higher low, the put in this higher high, and guess what? Between these two ranges, the daily, you had a TPM turning point candle bearish, okay? So you're probably going to come down here and take out that low if that's the case, all right? So you don't know that this week is going to be the first red weekly candle in a sequence of consecutive weekly red candles. But if you wait for the daily TPM turning point candle and it's between those two ranges, it has to go somewhere. It's either going to take the high or the low of the previous week. You could have an inside bar candle, but you know that'll be consolidation. Consolidation is not going to last. Eventually, it's going to break either way. All right. So, and this is the play that Ichano caught. So well done, Ichano. And that's what you can do. Like from here, you can say to yourself, you're doing the balanced entry, the 50% retracement, and your target is still going to be the weekly level, because whether it's daily or weekly, we would say a candle body closing underneath here is going to be your first lower low getting put in, right? That's your first lower low getting put in. And now because it's closed underneath the higher low, you've shifted bearish potentially, right? That is how you can see it. It's between those two ranges. I'm just going to do AUDCHF for Andy just to show the comparison. Andy, I did struggle with AUDCHF last night when you were asking me because it's not as clean as AUDCAD, but I'll just mark it up the same way and show you. So that was our higher high, right? That was our higher low on the weekly, just using the wicks again, just to make it simple on the weekly would look like that. Right, going down to the daily. Oh, sorry, I didn't mark the weekly up again. My apologies. There we go. Done. So you can see what's happened, right? The TPM turning point candle, putting in bearish, has already taken out the low of the prior week. So if that was your target for shorting, if you were shorting, you'd be targeting that as your first take profit or your break even. You can't enter at a take profit level, all right? And I know on the daily you're waiting for the shift, which is also not wrong, but you can see the difference between a AUDCHF and ACAD. Like if this had occurred inside of the range, like if that had happened, up here, sorry if that looks really bad. If that had happened up here and then targeting down here, like that would have been amazing. It'd be like a perfect play, right? So that's how I want to help you guys, and Aaron with his report, we want to help you guys determine the range and whether it's going to take out the weekly high or the weekly low from the prior week. And like I say, the easiest candles is going to be the second and the third weekly candle when we're trending. Catching the first one can be difficult, but AUDCAD is an example of the first red weekly candle using the range and the TPM turning point candle to get it. And yeah, that's why I was saying to you, Andy, sometimes the 4 hour can actually already tell you that the trend is changing. And you can see that the 4 hour has shifted. So just be careful going into next week. We actually think that AUD is still bearish. And with Ichano's play, I'll just show you guys again. Let me just remark this up. Sorry about that. I should have shown you this already. He actually caught the turning point candle on the 4 hour time frame, which is totally fine. You can do that. So obviously the daily turning point is the safest. I think he caught the turning point on this daily, but using the 4 hour. So we can go down to the 4 hour, have a look. So even there, this is amazing. Like if you're being really aggressive, you maybe got stopped once because that would have been a TPM turning point candle, but it's not. You want to enter at or above the weekly open. Like that's too close to the open, I would say, to enter. And sometimes it does rip right off the open. It can happen, but that would have been great. Your first for proper 4 hour above the open TPM turning point candle inside the prior weekly range, and you're targeting, you know, that higher low on the weekly. Ichano caught this candle here, like, well played, and that's it. TPM turning point candle number 3. He just did that, and he got out at the close of this bearish candle. That's all you need, right? So if this had already taken that, if this prior move on the prior day had already taken out this level, I wouldn't say continue to look for shorts, because you're now not within the range. You want to be within the range. That's like your 50% retracement that you're getting, and then looking for the confirmation of the turn. That right there is telling you that the weekly wick, or the daily wick in that case, the daily wick is in on a higher time frame. I know I used to use the D15 confirmation, but a lower time frame can create a lot of noise. So this is, once you get the turn on like the 4 hour, is telling you at least the daily wick is in, and it can also be the weekly wick, but then the daily TPM turn is telling you that the weekly wick is in. And if we remove everything, let me just get rid of it, you'll see that. So this daily TPM turning point candle, I'm just going to include that because it's engulfing that one. So let's just go to the week. Like, you can see that you're catching the wick. Like, I know it's broad, you're going to a higher time frame so that you don't get as many stop outs and as much noise, but it's telling you that the wick is in. And going back to the 4 hour to show you, let's just do I'm just going to do the engulfing, because that's, and I'll include the high because we have to, like, that's where you'd be swinging, I know Chano swung the immediate candle, but just being very safe, you can go there. And let me just do that day as well. Let's look at the daily candle. You can see, right? Well, he's getting a bit into the body if he's entering there. He caught the wick. So it's at least telling you that the top, if you're shorting, is in on your higher time frame candle, and the bottom wick is in if you're longing on your higher time frame candle. So that's one way of looking at it, Andy. That's why AUDCHF was really difficult. I hope that makes sense. If it doesn't, just ask us questions. But Aaron and I, we will be breaking down trades like this for you guys. It doesn't change anything from what we've taught you. It's just maybe another perspective of looking at the structure on the weekly time frame, how we mark obviously those highs and lows. Like I showed you on the UJ example, it is still the high and low structure on the step staircase as you go down. But because we're swing trading, our targets are going to be weekly targets, and we're going to be using weekly bias. All right, guys. Thanks.